Namaste friends, welcome to Gyanvet channel. Today we have come up with a new video for how to build investment portfolio. It is important friends for everyone. Before you start investing, you need to find the different ways to build your portfolio. So in this video you will get this complete details, so please don't skip this video till end. Anyone visited the channel for the first time? Request you to please subscribe, like, share it with your friends. Don't forget to press the bell icon so you will get notifications with our new videos upcoming. When it comes to investment, everyone wants to build a good portfolio which will be helpful for your long-term benefits. So you will have different goals. There are the risks associated with your portfolio and the tenure. So we are going to discuss all these aspects in this video. There are opportunities to invest in FD, bonds, gold, mutual funds, equity, ULIP, PPF, even NPS. So we are going to discuss all these things in the video. Why do I need to build a portfolio before I start investing? So let's say I have certain financial goals that need to be met. I want to build a wealth over long term. I have certain future needs. I want to do my retirement planning. I want to have a good education for my children. I want to keep some fund for emergency usage. All these could be a different purposes of building a portfolio, and ultimately our investment horizon and portfolio will help us to get maximum returns on our investments. During the portfolio building, you need to consider certain factors. You need to have the security or liquidity that can be used for your funds for immediate usage. Also, your portfolio needs to have the ability to grow the wealth. Also, there need to be a consistent income generation. No one want to keep their portfolio in the negative profit for a longer time. So these are the important points to be considered. We have so many options for portfolio building where you can have the investment opportunity. So let's look at these opportunities. We have an option to do a fixed deposit. It can be at the bank or some post office savings schemes also. There can be some government schemes or government bonds that can give you good returns over the long term. There can be an opportunity in the gold investment. You can either invest in the physical gold, you can invest in the sovereign gold bonds, you can have some mutual funds or the ETFs also that gives opportunity to invest in gold. There are the bonds from public and private sector companies. Also, there are some schemes that will give you enough liquidity as needed on the fund's capability. There are so many types of mutual funds which have the investment horizon across different types of assets. You may want to use that as well. You can directly choose the equity option. You can have your demat account and buy and sell your shares. There can be an opportunity in the national pension scheme. Also, there are different products from the insurance companies on the name of unit linked insurance plans which have also investment in the market. Also, public provident fund also have been a popular investment option for so many investors over the long term. When you are designing your portfolio, you can do it yourself or you can take help from the professionals. So you need to aware of certain factors like what is your financial goal? What is the risk tolerance that you can sustain when market is literally volatile or having so many negatives around? Also, you need to consider what is the tenure for your investment horizon, how long you can keep your money to grow it with the optimum ways. When you define your goals for your portfolio, there are few examples like you may need to build it for your child's education, you may want to plan your retirement, you may need to buy a new house, you can set up your business, you can buy a vehicle for your usage, or some people might have a goal to spend good amount of money on their lifestyles. everyone can have different types of goals. They might have different amount linked to this goal. So we need to define it at our own. How will you evaluate your risk potential or your risk tolerance? There are many factors to be considered at this point of time, like what is your age and at what age you want to achieve your goal. Also, how much is your earning? How much is your saving potential? Also, you need to know how much time you have in hand to reach out to your goal. This will help you to evaluate whether you will be able to sustain if there is any kind of negativity in your market or the investment portfolio. Based on your goal and your risk tolerance, there can be different types of portfolios can be built in anyone's life. It can be conservative. You might have a portfolio that will reach out to a growth. You might have some aggressive portfolio building. Some people which are able to take the high amount of risk want to have even a super aggressive goal, or they might build the portfolio accordingly. Some people tend to invest in equity markets. So you can have direct equity, or you can have the investment in large caps, mid cap, or small cap type of the stocks. Even some people will tend to pick the value stocks. Some will want to pick some multi-baggers. Even some people would prefer to invest in the penny stocks. There are different types of equity opportunities there in the market when you want to invest directly in equity. If you are inexperienced to pick the right stocks at the right time, you may incur huge amount of loss in your investment portfolio. So there is another option. You can pick mutual funds to do investment. So these are called like someone else will take the decisions for the investment on behalf of you. So there are different types of portfolios available in the mutual fund category. Like you may have large cap or blue chip kind of funds. You may have the mid cap opportunities. You may have some funds investing in the small caps. There are other options like flexi cap when you want to use this large cap, mid cap, small cap at the same time. Also, there are certain sectoral funds, there are thematic funds, even some funds at the different categories of the funds as a focused equity funds. Also, some people who want to take less risk, they have some options like hybrid funds, balanced funds. Even now, we have some balanced advantage funds or multi-asset funds also available in the market. Some people who want to have even further risk ability, they can choose the debt funds, bonds, or they can use the liquid funds also for their investment. We already have so many types of videos on our channel on these investment aspects. If you have any specific questions, please mention this in the comment box and we will try to come up with answer, or we'll try to build a separate video if there are so many viewers who want to have the answers for these funds. Now let's see some sample portfolios. Let's say you are very young. So let's say your age is 20 to 30. Even in that case, based on your goal and your risk tolerance, we can have multiple portfolios. So we have given here like super aggressive, aggressive growth or conservative type of portfolio. We have considered that you have a time frame to grow your money for across 20 years. So you can choose your lump sum investment. Sometimes you can build the SIP also or STP mode also. So we have so many videos in that aspect also. So we have here taken considered some options like fixed deposit, bonds, gold investment, some direct stock investment, mutual fund investment. We have considered the public provident fund or Sukanya Samruddhi Yojana also if you are eligible to opt for these funds. Even some people tend to invest in the national pension schemes. So we have considered different categories of funds so that you will be able to diversify your investment, also to minimize your risk. If you want, you can pause this video for a minute, take a look at this table in detail, and then move to our next. Now let's see, your age is between 30 to 40 years. So you may have different type of portfolio even in the same category. Here also we have given the tenure as a 20 years. Also buckets are like super aggressive, aggressive growth and conservative. But the percentage to be invested in each of the asset bucket may not same. Also, the definition of super aggressive, aggressive also can be different as per your portfolio. Some persons who want to use this mutual fund category, so they might want to have this in the large cap or mid cap or small cap or flexi cap. So you may have different types of options under each of this category. You need to understand your portfolio better because no one else will be able to justify your investment horizon. Now let's say your age falls in between 40 to 50 years. Here also we have considered the tenure as 20 years, but same times the definition of portfolio or type is different. Here at this age you might want to have more number of percentage in the FD or bonds rather than in equity or mutual funds. Same thing in some category, like if you are conservative and you are falling between 40 to 50 years of age, you may want to have more percentage in the FD or the gold. But and you same time you may not want to invest in stocks directly. So same type of portfolios can be built for different types of investors. Once you are able to build your portfolio, you can adopt certain type of strategy to keep the investment in your portfolio. How? You can opt for SIP. You can have incremental approach that as your age or income grows, you may want to add further amount in your investment installment. Also, if there is a negativity or fall in the market, you may choose to do some top up. We have separate videos also in SIP's incremental approach or top ups also. You may want to take a look. If you have certain lump sum amount for now, you can first park in the liquid or the debt fund and slowly you can move in the equity in terms of STP. Also, you can have diversification. Either you can choose different types of mutual funds or different mutual fund schemes in the same category also. Also, you should be aware of the tax, how much you will be taxed for your redemption. How you will be able to do the rebalancing. We have some videos also on the tax saving and rebalancing. You can please check on this channel. Also, whenever you want to redeem, it is better you plan that as well. Don't just redeem as and when you need it. Suppose if your target is 20 years away, you can think of starting the redemption couple of years before so that your investment and returns are safe. If you have any questions on your portfolio, please mention in the comment box. Our team will try to give you answers. Also, we will come up with many such videos which will be useful for your investment. So please don't forget to subscribe, like, share and press the bell icon. Happy investing. Namaste. Dhanyavad.